What it is, y'all? This is Maul here from the Gym Therapy Pod. And on today's episode, we're going to be talking about option trading. So we're going to break this topic up into about 2 to 3 parts because option trading can be a little complicated, but I'm going to explain it in the best way and the simplest way possible. So exactly what is the option? So option trading is giving you the permission to buy contracts to not only necessarily own said stock, but to be able to trade those contracts to make profit off of those contracts. So let's get into more detail about said contract. So the contract actually allows you to buy 100 shares of said company, but you also have this thing called the expiration date, and you have this thing called the strike price. So the expiration date is any date that the option contract is good until. So let's say the option contract is good until this Friday. Let's say the option contract is good until this Friday of next year or next year around the same date. The expiration date of the contract varies based off of the said company that you're buying these contracts for. And then you have this other thing called the strike price. Now, the strike price is the price in which you believe that that particular company will be trading at the expiration date. So for an example, let's say we're trading a company and it's trading around $100 right now. Let's say we believe that it will be trading at $110 in 2 months. So within 2 months, that'll be your expiration date, and that 110 price mark will be your strike price. And so you will put an order in to have the ability or to have the leverage to buy 100 shares of this said company under that contract for the expiration date for this strike price. Finally, you have 2 other additions to option trading that we're going to, again, keep it very simple. So you have what is called a call and you have what is called a put. So if we use our last example of the expiration date, the strike price, and that $100 price point for whatever company we was looking at, we have this thing called a call and a put. A call is basically you believing that this particular company will rise or the price of that stock will rise. And so if you want to put a call order in, let's say that company is trading at $100 per share and you want to use the strike price of $110, that means you believe that that particular company is going to rise in value. And so you're going to put a call in, which is meaning that that company is going to rise in value for $110. And so that's basically what a call is. Now, a put is literally the opposite of that. So you believe that this company is going to lose value within that same 2-month, 3-month time frame to use as in our example. So let's say we had that same price or that same company at $100 per share, but we believe in 2 to 3 months, it's going to drop down to, let's say, 85 or $80. And so that will be our strike price of 85 or $80, but we're going to put a put option in because we believe that this company is going to lose value within these 2 months. And so those are the differences between a call and a put option. In conclusion, kept it very, very brief and very, very simple when it comes to option trading. And again, we're going to have more than one part, like 2 or 3 parts to kind of go into more detail about those terms that we just went over, but wanted to keep it very simple so you guys can understand the concept of what option trading is, because it is very complicated once you get into the thick of things, but it does build upon what we've been talking about in these last weeks, in these last videos. That's why it's important to understand technical analysis, to understand financial, being able to understand financials, or looking at financial analysis and other sorts of instruments to help you if you do plan on trading options. So again, we're going to be going into more detail about option trading in the next 2 to 3 videos to give you more of a deep dive and detail oriented on the terms we just talked about. But this is just like a very very slow, easy to follow introduction on some of the terms and actually what option trading is. So look forward to seeing you guys next week for another episode of Technical Tuesdays. As always, lock in with us. We're dropping content every single day, every single week. Like, follow, share, comment, tell a friend, send it out. But again, thank you all, and I'll see you guys next week.